Hello and welcome to Business Today Television. You're watching our pre-Diwali special series on how India is consuming and spending and what it means for a host of sectors. On the show today, we discuss one of the non-market but directly linked to our economy sectors, which is the real estate sector, and what a time it has been, especially for luxury housing. And to discuss what's happened and what is likely to happen in the new Samvat 2081, we have some of India's best known faces as far as real estate is concerned. With us, Niranjan Hiranandani, the founder and chairman of one of India's best known developers, Hiranandani Group. Also with us, Dhruv Agarwala, the group CEO of housing.com and proptiger.com. And also with me today on the show, Arnab Dutta, my colleague from Business Today, who tracks the real estate sector among so many others. Welcome to the show. Before I go to the experts on the panel, I want Arnab to set the context for our conversation today with a bit of his most recent reporting across the Business Today universe. Arnab, you've been reporting on how home sales have been at a record high in 2024, with the Jan to September period seeing sales of almost 230,000 units. Break it up for our viewers. What really is happening as far as sales and prices also are concerned, Arnab?
Yes. So as we can see that the numbers are at record high, and within the first 9 months of 2024, we have already reached the level of 85% level of 2023, the total sales of 2023. And this upward swing has started basically from after the COVID impact was waning. It was in 2022 when the upswing started, and after almost a decade of a downward spiral in the real estate sector. And it continues despite the fact that the cost of construction went up significantly due to the geopolitical tensions and other factors. And prices have also gone up significantly. As per one report, 49% jump from 2019 to 2024 in the top markets on an average.
Okay.
But still, home buyers are willing to purchase flats, and basically the decisions are now being made on the basis that they want a secured residence instead of, because a lot of people face difficulties who are staying in rent during the COVID. That is one of the reasons. Also, it's a safe bet for investment for many people now, given the volatility in geopolitical tensions and that are going
Arnab,
on.
one of the other points that you have made in your recent reportage, and viewers, please do check our reportage on businesstoday.in, that sales of homes priced above 5 crore rupees actually grew 96% in these 9 months that we are discussing. I will come to my guests for an explanation for that, but Arnab, quickly put that in context for our viewers.
Yes. So, say, not only that, even homes priced between 3 to 5 CR have grown by 107% in the first 9 months of 2024, which is unbelievable. And as a result, what has happened is that the share of these segments have gone up significantly, and now together they form almost 15% of the overall market, in a market like India, which has always been known as a mass market kind of market, basically economy. So that the reason behind it is in luxury, especially, obviously the experts would be better placed to comment on that. But what I learned from the developers is that the luxury segment is driven by the startup boom, and of course the professionals, and both the spouses are working, that kind of families, and they are now basically investing heavily in real estate. That is what basically booming this sector. And
viewers, we can interpret this in several ways. And before I go to Mr. Hiranandani, दिल भी बड़े हैं और घर भी अब बड़े हो रहे हैं. Niranjan Hiranandani, the mood is upbeat, and we saw the Dashera period when it was very difficult to come to the real front page of a newspaper because you had to wade through 5 or 7 front covers of various real estate launches. Luxury is grabbing the headline. But is that hiding a different reality? What is really happening as far as our real estate sector is concerned, sir?
Thank you for inviting me. It's always a pleasure to be with BTTV. And the first thing I want to tell you is the fact that the country is upbeat. It's not only luxury houses, but it is luxury cars. It is luxury items in various fields of activity, and people are looking on the luxury side because overall incomes have definitely moved up. The 7% GDP growth has actually got a downstream movement wherein incomes have definitely gone up. The stock market is producing higher yields and results. Salaries have also gone up almost 7 to 10%, 12% in the year. But overall, post-COVID, as our friend Mr. Dutta just told us, the trend in terms of the mindsets of the people is also to see that they get a bigger house, better house, a little more spacious house, a little difference. Of course, if you can afford it. The second part of the story is the fact that banks and financial institutions have actually grown. Lending has gone up as much as 20% of a single bank like State Bank of India. So total home loans which have been given by the banks and financial institutions have gone up. And this is in fact contrary to the position where the PMAY scheme got exhausted August last year. And that is why there is a setback to the affordable housing segment. So two aspects of it, which is very, very clear, is that the overall income levels of people have gone up, aspirations of people have gone up, availability of funds and home loans has definitely gone up. And that is why the premium segment is doing it. A part of it is there is this other story on the sidelines, but that is not applicable all India, that certain cities like Mumbai metropolitan region, huge expenditure is taking place on the infrastructure. So in Mumbai region, for instance, we are adding to 300 kilometers of metro will be added in the next 2 years. We have already done the connectivity to the MTHL going to Panvel and New Airport. And we are getting a coastal road connectivity, which is improving the entire thing. So this and other things and metros in the tier 2 cities also, some of the metro lines are getting laid. So all in all, a heightened market, aspirations of the people to move up the line, and the availability of funds and finances, both from surpluses of individuals, surpluses from the stock market, and availability of home loans. A combination of all this has caused prices to move up, but more than anything, aspiration of people is huge.
Viewers, we keep tracking the stock markets and use terms like a bull market run that's been on despite some recent declines, but the real bull market has been seen in the real estate sector. Dhruv, thanks for your patience, because I was hoping to get you now on your most recent report that I have in my hand, roughly 3 weeks ago, where the headline, viewers, of the report is that India's leading 8 residential markets experienced a year-on-year decline both in sales and new launches in the most recent quarter that we are discussing, which is July, August, September. And this is the Real Insight residential report by proptiger.com. Dhruv, what does this mean? Is the tail now petering out? Are we slowing down, running out of steam, or is this a seasonal downturn?
Siddharth, first of all, thanks for having me on the show. It's always a pleasure to speak with you. I think there's a bit of both of what you mentioned. Over the past few months, in fact, I had a conversation with Arnab as well on this earlier when we met offline, that, when price rises take place so dramatically and go up so rapidly, so fast, it tends to crowd out, end users from the market. I completely agree with what Mr. Hiranandani said, that there's a massive wealth effect because of what's happening in the stock markets. India as a nation has seen wage increases happen at a clip of about 9 to 10% on average for the last several years. Even interest rates have stayed flat for the last 10 sort of policy reviews, right? So it's been a fairly good market in terms of the overall macro for real estate. But I think when prices rise so rapidly, genuine users, tend to get pushed out, and a lot of speculators come into the market. And that's when, sort of you have the classic bubble forming, which ultimately leads to the markets correcting. So I think there's a bit of trepidation in people's minds that, are we sort of staring at a potential correction just around the corner, which could have slowed down things a little bit. Plus, there's also seasonality. Typically, October to December is the quarter when you see a lot of demand because of the festive season. As we know, traditionally, it's an auspicious time of the year. People sometimes postpone their decisions to this season. In fact, even as a company, a lot of our ad spend, which we do, we slow it down in the quarter which just ended in September, and kind of ramp it up again in the October to December period, just keeping in sync with the sort of seasonality, which
Yes.
is. I think there's a bit of both, but I'm very optimistic, frankly, about this quarter. Just given the fact that we are seeing a lot of interesting offers from developers out there, encouraging demand. I'm seeing that whatever early signs in October, things are looking better. But again, the data will speak for itself at the end of the quarter. But this is definitely a seasonal high, which I think all of us in the real estate industry are very excited about.
Viewers, you are seeing a couple of charts on your screen, and I'll bring them back up. Major drops in Mumbai, Hyderabad and Pune. And I want Mr. Hiranandani to also come in. Let's try and go full frame on this for a moment, producers. Because as you see from this chart, it's pretty interesting. Delhi NCR year-on-year sales related change is 29%, although quarter-on-quarter is a 9% dip. All across Ahmedabad, Bengaluru, Chennai, Delhi NCR, Hyderabad, Kolkata, Mumbai and Pune, 8 markets, there is a 15% drop quarter-on-quarter and 5% year-on-year. But Delhi is a standout. Delhi is the only one that's marked on in yellow there on your screen. What could this be? Dhruv, do you want to quickly step in and explain this, and then I go to Niranjan Hiranandani?
Yeah, so look, I mean, Delhi is sort of the anomaly here in terms of a market where you've actually seen in calendar Q3 an actual increase in sales over the same quarter last year. The other markets on the screen, like Ahmedabad, Bangalore, Chennai, Hyderabad, we've seen a decline. We've also seen, again, I don't have the data upfront in terms of where the declines have taken place quarter on quarter, but at least as per our data, this is the second quarter or third quarter actually in a row where we've seen quarterly declines as well.
Mr. Hiranandani, because Dhruv, just hold on.
Yeah.
You raised this point, and coming to you, Mr. Hiranandani, Ahmedabad quarter on quarter 2%, Bengaluru 17%. The steepest drop as per this data is in the Mumbai market of 22% decline. On a yearly basis, that's just 1%, but quarter on quarter is 22%. No market out of these 8 has seen gains in this quarter. That's the point that Dhruv is making. Is this telling us that a continuous slide is happening, or do you see it being corrected and stabilized?
No, we had 2 weeks of Shraddh period, which is an inauspicious time in Mumbai region. So you can minus 2 weeks out of that. And even then, of course, 22% is a high number. But overall, we don't see that happening in the market. There is definitely some drop, but I would consider it about 5 to 10% in this period. But the interest in terms of the market has come back, and we do believe that this thing will compensate in the next quarter, in this quarter, which is there along with the period of fair. The challenges which are there in the local market is more about the election period, which has come up. So everything has gone a little locked up in terms of that. So probably even some of that is going to be a challenge period. But having said
but just to interrupt you, sir, let's bring up new launches. And I want you to reflect on the new launches data also, and then continue the point you are making, and Dhruv and Arnab can also step in. New launch data, this is a quarter on quarter and therefore also an annualized thing. As I can see, Calcutta has had 101% growth in new launches, and that's the largest, followed by Delhi NCR, which reflects to 76% annually, but quarter on quarter 48%. But the surprising thing, Niranjan Hiranandani, is Mumbai saw a 23% dip in new launches quarter on quarter, and Pune saw even steeper 39% dip quarter on quarter. That's on your screen. So is this therefore that India's priciest and most sort of sought after real estate market, Mumbai and then Pune, are they seeing the maximum slowdown within this data set? Is that how we should see this?
Certainly, data is always going to be superior to any opinion that I can give or anyone can give. So we will do on that. But you have to understand that today, for example, if you look at stocks, availability of stocks, which is unsold stocks in the marketplace, it is still the lowest that I have ever seen in my career. So the entire stock availability in the Mumbai region, I don't know about the Pune region, so I would not like to opine on the Pune region that is there, because I don't have that knowledge or information accurate enough to be able to give an opinion. But in the Mumbai region, the stock availability with us as developers has dipped by almost 50% to what it was 1.5 to 2 years ago. So if you look at unsold stocks, it is the lowest ever. And that could be one of the reasons why you find this aberration that we are seeing on the statistical data. So new launches will definitely go up again, and you will see this catching up very quickly. But I am bullish simply because we see the market as very bullish at this point of time too.
Okay.
And sales are closing down in the marketplace. I don't know what housing.com is to tell us about it, so maybe Dhruv can enlighten us more.
Dhruv, come in on this.
Also tell you the banks and financial institutions report, which has come in also, as far as the Mumbai region, is very positive.
Okay, very positive as far as the bank and other finances data is concerned. Dhruv, you want to come in on the point that Niranjan is making?
So look, as I said, there is definitely a seasonality factor in July, August, September, October, November, December, and then again the quarter post that, the January, February, March quarter. These 6 months are the best months, for residential real estate. So which is why, when you see a quarter on quarter decline as well between sort of say April to March of this calendar year, and then March then January to March, then April to June, and then July to September.
Right.
I think there is this whole seasonality element, right? Which is taking place. So the 6 best months of the year, financial year for real estate, is actually ahead of us. So October, November, December, January, February, March. So there is definitely a seasonality attached to that. But as I said, there is also some element of trepidation on the part of buyers, just given how rapidly prices have gone up. So there could be a bit of a wait and watch mode. But having said that, to echo Mr. Hiranandani, I think the stock markets continue to do relatively well. There is this massive wealth effect. The economy continues to be strong. Infrastructure development is an all-time high. Interest rates are again stable, if anything. Whatever RBI said recently in the last monetary policy review, sort of stance has gone to neutral, which means that the likelihood of a rate cut happening is just around the corner. So all factors point to the next 6 months, including October, should be a good 6 months.
Okay.
clearly the
So we-
price rises have been a bit of a damper.
Both our guests on the show are talking about the next 6 months, and I agree with that. But Arnab, I want you to come in and explain another bit of data that's come, and this is from Magic Bricks. Uh, Noida and Ahmedabad lead a inventory surge, and this is data that was released on the 22nd of October, so that's not old at all. And it says residential supply in 13 primary markets has risen nearly 12% in just 1 month. And investor sentiment is bullish in Noida and Greater Noida. Put this in context for our viewers, Arnab. What does this release tell us?
Yes. So talking about the markets in Noida and Greater Noida, so it's very obvious reason that developers now have to focus on those two, because first of all, those two markets have been neglected for almost a decade for many reasons. So as we know, lot of scams happened, lot of developers went bankrupt. So the market has not been explored as much as it could have been. Secondly, the airport that is coming up in Jivar, and if it's become fruitful like the government has planned, as per plan, if it can be executed, that would be a major boost for the region, given the fact that it's well connected through the expressway already, through Jamuna Expressway and the Noida Expressway. And if once the airport comes up, major traffic is expected to go up in the region. Also, a lot of IT and Fortune 500 companies are looking at now at Noida, apart from Gurgaon as their second office in the region, because the land, because of the lower prices of land and also real estate compared to Gurgaon, where you don't find a flat less than 2 CR, 3 CR now. While in Noida, you can still find 1 CR.
Arnab, did you want to step in and ask Mr. Hiranandani for any additional perspective on the markets, especially Mumbai, that they know so well?
Yes, I would like to ask him about not just about Mumbai but also Pune, because if you look at the numbers, the Pune market is now larger than NCR market, which is unbelievable, because Pune in terms of size and population is a fraction of NCR, and NCR has always been the second largest market in the country. Now it is almost at the fourth, fifth position. So what is driving this growth in Pune basically?
I think the Mumbai-Pune belt is been growing continuously. The Mumbai-Pune connectivity and the growth from Mumbai side and the Pune side both have almost come to a tangent. You will find that the linkage between the two cities, though it is I think it's more than 160 kilometers between the two cities. But in reality, if you see the growth on the Pune-Mumbai road, Mumbai-Pune road and expressway, a lot of development is already taking place on both sides, both in terms of warehousing, in terms of industrial, in terms of IT, and all these parts are taking place. Number two, we have the new airport, which is coming up, which becomes much closer to Pune because it's across the harbour and it is on the Panvel side. So you have the airport which is coming up. The Delhi-Mumbai industrial corridor work is also getting completed. That connectivity also becomes extremely important in this segment. So all in all, the Mumbai-Pune expressway, now the bypass which used to go through Khandala and Lonavala is sought to be bypassed by a new tunnel which is likely to open very soon, maybe in a couple of weeks or months. So all in all, what has happened is the distance, though physical, remains the same. The development on both ends are going up. So for instance, let's talk about from the Mumbai end. You will see that they are creating a third Mumbai, which will be at Panvel, in this thing which was announced by the government of Maharashtra just 2-3 days back. And you also have the corridor, which you have right up to Khandala and Lonavala. So all those pockets have got industries at the bottom end over there. And on the Pune side also, the development is going rapidly, where you have Chakan and other places on the Pune and Mumbai side of Pune, where the development is taking place. We as Green Base also has 250 acres where we are doing industrial and warehousing, which is going on. And Chakan is a fully developed new area for warehousing and industrial growth, with automobile being a focus area for the development. So industrial, warehousing, IT, residential, airport, new city, and the connectivity being enhanced in terms of the tunnel which has been done over there. This infrastructure is causing the difference between there, and so you see a partial growth and effect of it, where the pricing is slightly lower in Pune, and then people would take that place of it, especially on the industrial side.
Okay. Dhruv,
So it's a combination. It's a combination of a growth which is taking place, bringing both the cities closer in terms of development and infrastructure.
absolutely. All roads in some way are leading to a real estate El Dorado. Dhruv, I want to dial back on this point and get you to explain to our viewers. We have seen a test flight of sorts at this new Noida airport, and it seems to be completely on track to get up and running. But is that alone a reason to justify the kind of price rise we have seen in the Noida market? Phenomenal. In fact, I would argue that Noida has outpaced all the sub-regional markets within the NCR, because Gurgaon is one, Delhi itself, some pockets, Faridabad. So is that just a valid reason, or is it fear of missing out that people pile on and then developers also pile on to this and jack up prices?
So look, Siddharth, it's never a singular reason, right? It's a combination of all of these. I think whenever, prices start to go up, there is this big FOMO which comes in, and then, more and more people get in, and then you have speculators coming in. So all of that happens. And Noida, we've seen, is a market which is prone to that. The NCR market in general tends to be very volatile. When the going is good, it just, explodes. And when things start to kind of correct, it really corrects, right? So markets around NCR tend to be very volatile. That's what my experience has been, given my multiple years in the industry. I think for Noida, I think Arnab made a very good point. I think about the airport. Clearly, it's been in the doldrums for a long time, just given the reputation of the market and some of the blow-ups which happened with certain developers, etc. And that sort of trust is coming back. I think RERA has played a big role in bringing that confidence back, because the consumers feel that there is accountability now for developers. I think one thing we forget about, and of course the airport, right? But one thing we forget about Noida is that two things I would say. One is from an infrastructure perspective, living, in NCR, I think the infrastructure there is far superior to what we have in Gurgaon. The social infrastructure is much better in Gurgaon, I would say. But I think Noida is also catching up. But I think one thing which we are forgetting is governance, right? In the last few years, the governance has gone up significantly in the state of Uttar Pradesh. Noida always sort of, had the quote unquote, UP discount, because, people used to always worry about, governance, law and order, etc. But that has seen a step change in improvement, right? I think that is also a big factor in driving confidence in the Noida market. So we shouldn't underestimate that.
I'm going to end the show, but with the 30-second responses from all three of you, because this is something I know is asked at either the beginning or end of any real estate conversation. What will happen to prices? Because everyone, somebody who doesn't yet have a home is a first-time buyer. Those who have want a second larger home, and everybody looks at that price point. So, Mr. Hiranandani, I know it's difficult to average out the various classes of ticket sizes, but what is going to happen to prices over the next 6 months, unless you want to offer us a more medium-term forecast?
So your minimum price rise will be at least equivalent to inflation, which is about 5%. So across the board, you will get a 5% increase in prices. Where we get infrastructure which is substantially improved, or you get new things like the Java airport or the Mumbai airport, you'll obviously see a price point which will increase at double the rate. So probably 10% or more will increase in these areas. other places where we are creating too much surpluses in terms of property, there could be a slight drop, but depending on what it is. So, what tends to happen is really you create sometimes supply in a particular area in a short period of time. That is what is happening in Noida and Greater Noida. So the challenge is that when you create surpluses in a short period of time, the absorption takes time. So as long as you're doing it slowly, a 5% price rise is bound to take place across the country. But you will see drops in certain areas where unnecessarily surpluses are created in a very short period of time, and aggressive increase by about 7 to 10% where infrastructure boom is taking place, like Jawar or Mumbai region, like Panvel, Navi Mumbai, 10 to 12%.
Arnab, the same question, but I want you to focus only on tier 2 and tier 3 cities, because that we haven't managed to discuss. Is tier 2 and tier 3 also going to mirror the kind of outlook that Mr. Hiranandani is providing, or would you have a different take?
The tier 2 and tier 3 cities are already witnessing significant interest from multiple developers, especially who are homegrown basically. But unlike earlier, now there are developers who have established their brands in the tier 2, tier 3 cities and adjoining regions, which was not the case a few years ago. So that is also attracting a lot of investments even from cities like Delhi or Mumbai, because if you recall, when this Ayodhya project was launched initially, the mandir was inaugurated, and there's a lot of queries. Mr. Agarwala would be better placed to answer that. But lot of queries from markets like NCR who wanted to just invest in the and get a slice of that boom. So, but in cities like say Jaipur and maybe Kochi, even larger developers are also investing. Like from Bangalore Prestige or Brigade Group are launching projects in a market like Kochi. So lot is happening in tier 2, tier 3 cities. But only thing is that usually we don't get that periodic data, detailed data on them. So it's little difficult to gauge exactly what is the kind of increases that are happening there.
Dhruv, I'm completely out of time on the show, but the same question to you, a quick answer, sir.
Yeah, so look, I mean, I think there's very little room for price hike, frankly, because as I said, prices have risen so rapidly. So I hope prices stabilize and track inflation, as Mr. Hiranandani said. Real estate being a hard asset should ideally track inflation. There will be pockets always where there is infrastructure development, or there is some kind of an urban renewal happening, or there is a tier 2 city where there's certain special investments happening, infrastructure projects, which should see a higher price rise. But otherwise, just given what we've seen in the last 24 months, I think there's very little room for rapid price rise. So I think Mr. Hiranandani's point around tracking inflation is on the money.
One final comment, viewers. We've discussed all the big metros and other stuff, but it's infrastructure that will continue to drive real estate on a complete basis. And I leave you with the thought of what is happening with the new port in Kerala. And I was reading that while the port is coming up and has managed to do massive amounts of shipment cargoes, the road that leads to it can't even take a normal truck. And imagine, once the road infrastructure develops, what will happen to the surrounding in terms of real estate, both commercial, residential or warehousing. And that, I think, is the story to track if you're an investor. But if you're a buyer, as long as you can afford it, don't have the fear of missing out. You can buy any time. And people like the Hiranandanis help you do that, and Dhruv helps you make sense of data, and Arnab also tracks it for all of you. I'm going to thank all my guests today on the show, wish them and their entire family and colleagues a very happy Diwali. We'll be back with more on Business Today Television. Until then, goodbye.
After over 4 years in a frozen war-like situation, 17 meetings at the diplomatic level, and